Aloha, everyone. First off, let's take a look at the big picture of this market. If we go back to 2014 on the NASDAQ, basically I have a parallel line going here and here on the market. This showcases where major resistance is. This showcases where major support is in the market, looking at the 2014 October lows, the 2016 February lows, and the August 2015 lows, and the 2015 highs, and really the 2016 highs. As I've been saying ever since the February rally even started, overall, we are in nothing more than a giant range-bound market, a big old trading range for all of these indexes, basically best shown here with the NASDAQ. Now, that being said, off the February lows, it was a bit extreme, but I tell you what, we had a lot of nice moving individual stocks. We were making some decent gains, and even on the April pullback, our longs were holding up pretty well, and as we started to rally here in May, our long positions started to increase, charts looked better, our current positions were doing decently with gains, but the one thing missing, two things were missing actually, but the one major thing missing is our long positions weren't making huge gains quickly. No 20% gains in 2 to 3 weeks, no 50% gains after a month or two. The only one that was really succeeding for us off of its buy signal was CLR. It was the only one that really was up over 100% in a short period of time. So that being said, there was a lot left to the imagination with the long positions and also volume the entire way. Where was it? It was completely missing. It started to pick up a little bit here as we started to rally in May into June, but then once again as we continued on into June, below average volume. Now we didn't see a whole lot of above average selling, but clearly it started to come in, and then it really came in on Friday. For the first time ever, our models in 3 days went from basically being at neutral on Wednesday, then after Thursday's session a buy signal, and now the NASDAQ is plunging below this uptrend line, sending our operational models into sell signals on the NASDAQ and the NASDAQ 100, removing all of those technical lines. This breakdown on huge volume, whether Russell rebalancing or Brexit related, was absolutely horrendous, switching and making an immediate 180-degree reversal to the sell signal on the NASDAQ 100. Now, what does that mean? It means new long positions are now out. There's about 20 technical and fundamental criteria that I look at for a new long position to decide if it's going to be a 20, 10, 5, or 1% long position. You can be sure that everything must pass now for a stock to be a new long position. That includes it must be in a top ranked sector where there's multiple stocks moving up while the market is either moving sideways or down. And so bottom line is long positions are going to probably dry up for a while. This is some major technical damage. The other thing that happens in certain stocks where we have decent gains in, or we barely have gains in, like Glob, where our long position was back here, the moves on Friday now must be our absolute final sell stop levels. There's no question about it. If Friday's lows on a lot of my holdings go, then that's it. Whoops. Another winning position that got hit was EBIX, for instance. So the Friday low on EBIX, you could split half of your final stop here and half right here below these lows. But this was a pretty key break. If the Friday lows break, EBIX is definitely not going to hold these lows, and it'll probably easily come all the way back into its February-March breakout. So it's this kind of situation I'm monitoring in our current long positions that we still have on the books. Surprisingly enough, on Friday, I had many sell stops trigger in the morning. I thought, though, it was going to be an absolute bloodbath for my portfolio as I'm heavily long a lot of different individual stocks. No one long position gave me an incredible, great long signal. PRFT was setting up to really look like it was going to break out, but then all of a sudden on 6/17, it broke below the 50-day moving average on heavier volume, giving a full sell signal. And it was stuff like that that happened. Interactive Brokers was looking really good off the lows with some strong accumulation. It rolled over. AXL, for instance, off the lows was looking good on some strong accumulation. It rolled over. So these kind of stocks that were setting up and then rolling over, you can see RP, a lot of accumulation, and Greenbot, nice move off the lows. Still holding its uptrend line, and like I said, those Friday lows, if they hold, all's well. but some bad price action. And if those lows go, it's probably going to get much uglier, because if we look around the rest of the market, it's pretty ugly. Now, the Russell 2000 has switched from neutral, or actually, it stayed under a buy signal the entire time, while our indexes here on this pullback here on all the other indexes switched to a neutral signal because they eclipsed the 50-day moving average, the NASDAQ, S&P 500, and everything. The Russell 2000 held its 50, so it remained under a buy signal. Well, after Friday, it's now under a neutral signal. Once it breaks the 200-day moving average on above average volume for this index, which I guess can be best seen on this, since I use telecharts for my videos, the IWM, then that will switch it to a sell signal. If it breaks on low volume, once this May support goes, it's under a sell signal. So Russell 2000 is under a neutral. The NYSE is under a neutral, but that looks really ugly, so expect that to change swiftly. Like I said, I don't think these Friday lows are going to hold, and I'll show you why here in a minute. S&P 500 is neutral. Dow Jones Industrial Average is neutral, as you can see, as it's holding those May lows. But the NASDAQ 100, they broke below their uptrend line so hard on such strong volume that they got to switch. And when you look at the tech stocks like Microsoft, that's ugly. That's a rollover. Intel, that's a nasty breakdown. Apple, really couldn't even get back above the 50, now re-rolling over. Google, you can see here, rolling over now in heavy volume. Priceline, obliterated back below the 50 and 200-day moving average on heavy volume. Just some very ugly action. And if you look at the XLK, breaking below the 200-day moving average on very strong volume, it's ugly moves. And then if you go further, look at the financials. XLF, nasty breakdown. Look at Goldman Sachs, ugly. JP Morgan, major breaks on heavy volume, nowhere near the February supports. So this is going to probably take a while to go through. It's just very ugly for the banks. But if you even look at the energy stocks, XLE, major break below the 50-day moving average on heavy volume. XLY, that is ugly. XLB, the builders. XHB, same similar situation. The biotechs further, another sell-off below the 50-day moving average on heavy volume. The semiconductors have reversed their near breakout and now breaking down below the 50-day moving average on above average volume. So there's just a lot of ugly action. Look at even healthcare stocks breaking down below the 20-day moving average on above average volume. So it's just pure carnage everywhere. And then there were some leading stocks. You know, everything's with our phone nowadays. Everybody's on their smartphones. I'm not, as I'm getting older, but Verizon, look at Verizon, major reversal off the highs on huge volume. AT&T, major reversal off the highs on huge volume. So some really ugly action everywhere. I just can't stress that enough. Microsoft, Intel, just, God, let's even look at some of the other big boys like Cisco, Oracle, you know, just ugly price action. So with anything that we're still long, like EBIX, where we still have a small position, in Glob still, the Friday low has got to be the final sell stops. But the most troubling sign I see out there is in the Dow Jones Transportation Average. Now, if everyone remembers, back in May of 2015, we got a sell signal in the Dow Jones Transportation Average right here. Show you what it looked like, actually. Let's truncate it and go back. Right here, we went under a sell signal in the Dow Jones Transportation Average. This is what the NASDAQ looked like at the time. This is what the New York Stock Exchange looked like at the time, and the Russell 2000. So the Dow Jones Transportation Average, while every other index is uptrending, is giving us a sell signal. Well, what happened to the NASDAQ right after that sell signal Dow Jones Transportation Average? It attempted a couple of V-shaped highs and then had its August crash and has stayed range-bound ever since. So I think it's a very bad omen that the Dow Jones Transportation Average has taken on this sell signal along with the NASDAQ and NASDAQ 100. It looks very vicious out there. I assume our neutral conditions will switch to sell. But that being said, I still want to be disciplined in case Friday lows do hold. Let's say a new round of QE starts on Monday. Let's say all central banks decide that they're coming in and they're buying stocks across the globe. Then I won't be just randomly selling at the market, which is another thing I almost did. I almost removed all my stops on the books on Friday. It would have sold me out of everything. I had a lot of stocks hold up overall that could still go higher. It doesn't mean they have to, but some of our long positions like GLPI, REXR are still trending nicely above their 50-day moving average. Now their patterns are getting ugly, and they could fail very soon. But the bottom line is I don't want to leave them early. If I would have done that back here or here, I would have missed out on these gains here. But no matter what, We got to raise our stops on the remaining long positions, new long positions, unless they pass all of my fundamental technical requirements are off. And we're looking at new short positions, possibly like USAT, DDD, or some ideas, and MNOV especially, but they're not quite supernovas, so I don't think I want to go short yet. But this market's in trouble. Cash is king. We got to see a reversal, or else it's going to get even more ugly.